Swayam Prabha. Digital India. Educated India.
योगः कर्मसु कौशलम्.
Hello dear students, I Dr. Komal Rawal from Somlalit College of Commerce, Gujarat University. See students, in part 7 we have discussed illustration number 11, 12 and 13. Each illustration is explained with required explanation. Explanation is very precise and clear to understand accounting treatment of respective transactions or adjustments. Again, in illustration 13, consolidated accounting information is provided, and for better understanding of every transaction, and this is displayed in tabular form, and concerned adjustments are also explained with proper description. In part 8, we will be continuing with some other illustrations with different aspects for practice purposes. Now, let us commence this part 8 with illustration number 14, where we are provided receipt and payment account and additional information from which we are asked to prepare income expenditure account and closing balance sheet. Now, we are going to start with illustration number 14. Receipt payment account for the year ending 31st March 2024 of Hanuman Hospital is as provided to you. Receipt payment account for the year ending on 31st March 2024 of Hanuman Hospital. Receipt side and payment side. First we will see receipt side. Cash on hand, subscription, donation, interest on investment, charity show income, special donation for operation theatre, government aid, sale of old newspaper. These information has been provided, and the total of this side is 4,72,500. Now, payment side, operation theatre construction expenses, purchase of medicine, honorarium to doctors, salary, sundry expenses, equipments purchased, charity show expense, periodical subscriptions, fixed deposit with bank, and lastly cash on hand 4,72,500. Other information provided to us are subscription outstanding, subscription received in advance, stock of medicines, cost of equipments, building, less depreciation, investment, capital fund. Now, from the given receipt and payment account and additional information, prepare an income expenditure account for the year ending 31st March 2024 and balance sheet as on that date. Yes students, now we are going to start with solution part. First of all, I will explain few points to you. Kindly pay attention. First point, the financial year is 23 and 24. Now, let us understand accounting effect of opening balance of 1st March 2023. From these balances, outstanding incomes, outstanding expenses, income received in advance and expenses paid in advance will have two effects. Now, we will understand this with the help of this chart. Receipt side and its accounting effect. First in that is subscription outstanding 900. Now, we will say its effect. First, it would appear in opening balance sheet on asset side. It is the income of previous year. So, this will be deducted from total subscription of rupees 1,50,000. Next, subscription received in advance rupees 300. First, it would appear in opening balance sheet on liability side. It is again income of current year which received in previous year. So, this will be added from total subscription, that is rupees 1,50,000. Next, we will see stock of medicine amounted rupees 18,000. See, first it would appear again in the opening balance sheet on asset side it would appear in income and expenditure account debit side, and it will be added to purchase of medicine of current year. The next point is cost of equipment, amount 1,05,000. Again, it will appear in opening balance sheet on asset side. Any addition will be added and any deduction will be deducted from it if done during the year. And finally, net amount will be shown in balance sheet on again asset side after deduction of depreciation if applicable. Next, building less depreciation 1,20,000. It would appear in opening balance sheet asset side. Any addition will be added and any deduction will be deducted from it if done during the year. And finally, net amount will be shown in the balance sheet asset side when after deduction of depreciation again if it is applicable. Next, investment 75,000. First, it would appear in opening balance sheet as it is asset side. Any addition will be added and any deduction will be deducted from it if done during the year, and finally net amount will be shown in balance sheet asset side. Seventh point, capital fund 3,24,600. First, it would appear in opening balance sheet but liability side. You have to be careful over here. Then next, the same balance would be appear in closing balance sheet, same liability side, and its related transaction of current year will be applied here. So this is the chart from which we come to know that what are its accounting effects. Now we'll move to next point. Point number 3, the financial year in 23-24, and we have opening balances from which we will prepare opening balance sheet. As on 1st April 2023, liability side and asset side. First we will see liability side. Capital fund 3,24,600. Subscription received in advance rupees 300. The total of liabilities 3,24,900. Now we will come to the asset side. Subscription outstanding 900. Stock of medicine 18,000. Cost of equipments 1,05,000. Building less depreciation 1,20,000. Investments 75,000. Cash on hand opening balance 6,000. The total of asset side is 3,24,900. Now let us understand accounting effect of closing balances, that is 31st March 2024. From these balances, outstanding income, outstanding expenses. Income received in advance and expenses paid in advance will have two effects. Again, now we will see receipt side and its accounting effects. First point in that, subscription outstanding rupees 1,500. See, since it is outstanding income of current year, it will be added to subscription of rupees 1,50,000 and rupees 1,500 would appear in closing balance sheet asset side, subscription outstanding. Next, subscription received in advance rupees 600. It is income received in advance and it will be deducted from total subscription of rupees 1,50,000 and rupees 600 would appear in closing balance sheet liability side, subscription received in advance. The next one is stock of medicine 21,000. It is closing stock of medicine, and to determine net consumption of medicines, it will be deducted from total of opening stock and purchases of current year. Yes, it will have another effect as well. The second effect will be given in the closing balance sheet. Asset side as closing stock of medicines rupees 21,000. Next point is cost of equipments, amount 1,56,000. We have opening balance of rupees 1,05,000 and purchases in current year of rupees 66,000, that will come to rupees 1,71,000. But we have closing balances of 1,56,000. Thus, difference will be treated as depreciation. And again, this depreciation would appear in income and expenditure account, expense side rupees 15,000. This net amount of rupees 1,56,000 would appear in closing balance sheet asset side. Fifth point we'll see building less depreciation 1,14,000. We have opening balance of rupees 1,20,000 and during the year no purchase or sale is done. Since we have closing balance of rupees 1,12,000, thus difference of rupees 8,000 will be treated as depreciation. And yes, again this depreciation would appear in income and expenditure account expense side as rupees 8,000. This net amount of rupees 1,12,000 would appear in closing balance sheet on asset side. Next point is investment, that is 75,000. We have opening balance of rupees 75,000 and during the year no purchase or sale is done. Thus, same amount of rupees 75,000 would appear in closing balance sheet asset side. Next, capital fund, but we don't have amount of capital fund because we have to calculate it. So, now we will see effect of it. We have opening balance, that is rupees 3,24,600. In this balance, we will add any capital fund received during the year and excess of income over expenditure. If we have excess of expense over income, it will be deducted from it and net balance would appear on liability side. Let us understand accounting effect of transactions of receipt and payment. We will see the same point in a tabular form, receipt and its accounting effects. First in that, cash on hand, rupees 6,000 in opening balance sheet asset side. Subscription, income side of income and expenditure account. Donation will be added to capital fund in closing balance sheet. Interest on investment, income side of income and expenditure account. Charity show, income side of income and expenditure account. Special donation for operation theatre, yeah, it is our liability. So, liability side of closing balance sheet. Government aid, income side of income and expenditure account. Next, sale of old newspaper, it is our income, thus it will add in the income side of income and expenditure account. Next, buy operation theatre construction expenses, it is our asset, so asset side of closing balance sheet. Purchase of medicine, that is 84,000, debit side of income and expenditure account and it will be added to opening stock of medicine as well. Honorarium to doctor, debit side of income expenditure account. Salary, debit side of income expenditure account. Sundry expenses, same debit side of income and expenditure account. Next, equipments purchase, it will be added to opening balance of equipments, asset side of closing balance sheet. Charity show expenses, as it is our expense, so it will include it on the debit side of income expenditure account. Periodical subscription, rupees 9,000, debit side of income expenditure account. Fixed deposit, that is FDs, so it is our asset, so asset side of closing balance sheet. Cash on hand, same, asset side of closing balance sheet. After having adequate explanation, we are going to prepare income and expenditure account along with the balance sheet. First, we will prepare income expenditure account for the year ending on 31st March 2024 of Hanuman Hospital. Expenditure side and income side. First, to medicine consumption, and that will have opening balance. Opening stock 18,000, we will add purchases of rupees 84,000 less closing stock, that is 21,000, to the outer column 81,000. Depreciation on equipments 15,000. Depreciation on building 6,000. Honorarium to doctors 75,000. Salary 54,000. Sundry expense 1,500. Charity show expense 9,000. And periodical subscriptions are 9,000. And the total of it is 2,50,500. Now come to the income side. The first in that is subscription 1,50,000. Now we have to deduct previous year, that is rupees 900, and we have to add current year in previous year rupees 300. Again we have to add outstanding of current year 1,500, and we have to deduct received of next year 600, and to the outer column will receive amount of rupees 1,50,300. By interest on investment 15,000. Charity show income 30,000. Government aid revenue 45,000. Sale of old newspaper 1,500. Excess of expenses over income 8,700, and the total of this side is 2,50,500. Now we'll start with balance sheet. Balance sheet of Hanuman Hospital as on 31st March 2024. Again here we have to prepare liability side and asset side. First we'll see liability side. In that the first point is capital fund amounted 2,40,300. This we have to write down in inner column. Then we have to add donation rupees 75,000 less excess of expenses 8,700. To the outer column 3,90,900. Special donation for operation theatre 1,50,000. Subscription received in advance rupees 600, and the total of liability side 5,41,500. Now come to the asset side. Equipments 1,05,000. We have to add purchases of rupees 66,000 less depreciation 15,000. To the outer column 1,56,000. Building 1,20,000. We have to deduct depreciation from it, that is rupees 6,000. To the outer column 1,14,000. Investment 75,000. Operation theatre cost work in progress 1,20,000. Fixed deposit with banks 45,000. Closing stock of medicines 21,000. Outstanding subscription 1,500. Cash on hand 9,000, and the total of asset side is 5,41,500. Now points to be considered while solving the sum are: C. In case of equipments, opening balance, purchases and closing balance is given in the question. Thus, difference is treated as depreciation of rupees 15,000. Another point to be considered is while opening and closing balance of building is given in the question itself. Thus, difference is treated as a depreciation of rupees 6,000. Illustration number 14 is explained with precise accounting effects. I hope it is clear to you all. Now we are going to start with illustration number 15, which is based on the same type of information, and you have to recollect accounting effects given in the illustration number 14 to solve this problem. See, your appropriate understanding of previous illustrations will help you in this illustration with some fundamental clarity. So now we are going to start with illustration number 15. From the given below receipt payment account for the year 31st March 2024 and additional information of Radha Charitable Hospital, prepare an income and expenditure account and balance sheet. First, we will see receipt and payment account for the year ending 31st March 2024 of Radha Charitable Hospital. Receipt side, balance brought down, subscriptions, donation is given to us, interest on 10% investment, income of charity show is there, and the total is 97,000. Now you can see payment side, medicine payment is there, honorarium to doctors, salary, sundry expenses, equipments purchased, expenses of charity show and balance carried forward. Again the total is 97,000. So all these information are provided to us in receipt and payment account. Now we will see additional information of the same question. We are having opening and closing balances, opening and closing amounts we have. First, subscription outstanding, opening balance is given 800, closing 1200. Subscription receive in advance 1500 and 500. Stock of medicine is there, opening closing, outstanding to suppliers of medicine is there, equipments, building. So this much information is being provided to us. Next information is on 1st April 2024, capital fund was rupees 1,68,300. During the year, medicine was purchased for rupees 34,000. So this is all about the question. Now students, we are going to solve the sum. For that, first of all, we are going to prepare income expenditure account for the year ending 31st March 2024 of Radha Charitable Hospital. We will prepare expenditure and income side. First, expenditure side will see in that the first point is consumption of medicines. Here we are having opening stock, that is rupees 5,000. Add medicine purchase 34,000, the total of it is 39,000. Then less closing stock rupees 8,000 and to the outer column 31,000. Next, honorarium to doctors 15,000, salary 25,000, sundry expenses 1,000, expense of charity show 2,000, depreciation equipment in the inner column 10,000 rupees, building 2,000 in the inner column and to the outer column rupees 12,000, and the total of it is 86,000. Now we will come to the income side. Subscription inner column 50,000. Then we have to less received of previous during current year, that is 22-23, amounted to rupees 800 and we will get 49,200. Again what we have to do, we have to add outstanding of current year, that is 23 and 24, amount rupees 1,200. So the total of it is 50,400. Again we have to add receive in advance during last year, that is 22-23, 1,500, 51,900 we received. Then we have to deduct receive in advance during the current year 23-24, 500, and the total of all this addition and subtraction we will get 51,400 to the outer column. Interest on investment 10,000. Next is income from charity show 12,000, excess of expenses over income 12,600, and the total of this side is 86,000. After this, now we are going to prepare balance sheet. Balance sheet as on 31st March 2024 of Radha Charitable Hospital. Same liability amount, asset amount. Liability side, capital fund 1,68,300, add donation 15,000 and the amount comes to 1,83,300, less excess of expenditure 12,600 and the total amount is 1,70,700 to the outer column. Subscription receive in advance 500, creditors of medicine 10,000, and the total of liability side 1,81,200. Now we will move to asset side. Here the first point is building. Building amount is given, that is 40,000. We have to less depreciation rupees 2,000 and to the outer column 38,000. Equipments same 20,000 in the inner column. We have to add purchases of rupees 20,000, 40,000 again in inner column itself. Then we have to less depreciation from it, that is rupees 10,000 and to the outer column 30,000. Subscription outstanding 1,200, stock of medicine 8,000, cash balance 4,000, investment 1 lakh, and the total of asset side 1,81,200. Now we will see explanation part and some calculation based on it. First, depreciation. In that, first point is, see, opening balance of equipment is given, that is 20,000, plus purchases 20,000, that will come to rupees 40,000. We have to less closing balance, that is 31st March 2024, amount rupees 30,000. Again we have to less reduction in value of equipment, which means depreciation only, that is 10,000. Now we will see another point of building. Opening balance of building, that is 1st April 23, 40,000 is given, less closing balance 31st March 24, 38,000, reduction in the value of building, which means depreciation. So that is rupees 2,000. Next point is value of investment. Price of investment is not given in the question, but interest is given. So interest 10,000 at 10% is given. Thus the calculation will be done as follow. When we will have interest 10, at that time investment is rupees 100. So when we are having 10,000 interest, then how would will be the investment? So we will do cross multiplication over here. What we have to do? 10,000 into 100 divide by 10, and we will get investment of rupees 1 lakh. I hope this point is clear to you. When information is not given in the question, we have to assume likewise, and then we have to do cross multiplication and we have to find out the investment amount. Now another point is the computation of subscription received and the consumption of medicine is disclosed in the income and expenditure account. In this part, we have studied two illustrations, number 14 and number 15, and are explaining and clarifying accounting treatments of transactions for preparation of final account, non-trading concerns. Further, explain accounting treatment of cash transactions and transactions of mercantile base. Next, these also explain determination of depreciation from given accounting figures, specifically opening balance, purchases and closing balances. It covers preparation of opening balance sheet. In part 9, we will see some other illustrations and illustrations where you are provided income and expenditure account and receipt and payment account, from where we will prepare opening and closing balance sheet. So that's all for today. I hope you understood all the two illustrations. Thank you and have a nice day.